Hairdressers often fear leaving a commission-based salon for chair rental, but financially, the shift can be life-changing. Today, we break down why going independent gives you more control, more tax benefits, and often a bigger paycheck.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal,
hosted by Anastasia, Maisha, and Danielle,
part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi guys, welcome back. I think this is going to be a fun one. Anna was inspired because she is fresh from the salon today.
Yeah.
So what are we going to talk about?
Kind of talk about the differences and changes for hairdressers.
Yeah. Okay.
Yeah. So
let's get into it. What are the two different types, or is there more than one? Two?
Well, it's the same as with all of them. You know, do you want to be a W-2 employee from the salon and, you know, hired directly from the salon? Or do you want to kind of go out on your own, rent a space or rent a chair in the salon and then be a 1099 employee?
Okay.
Not employee, but a 1099 worker where, you know, you are directly collecting payment from your clients.
Oh, okay. So I'm assuming there must be like pros and cons to both sides then. Yeah.
Right.
Yeah.
Right. So, you know, when you're the W-2 employee, you're working for the salon. So the salon is kind of feeding you clients. And then in a lot of cases, they're paying for a lot of the materials so that you can complete that service.
Gotcha.
Versus when you decide to kind of go out on your own, you're paying a rental fee for your chair.
Okay.
And then you have to bring in your own clients. You set your own prices, but you also have to pay for some of your own equipment and bring your stuff there.
Okay. Okay.
So sometimes that can be a little bit scary, you know, especially the client portion, because, you know, once you're renting your chair, sometimes the salon isn't really incentivized to give you clients anymore because they're only getting your rental fee every single month, you know? So there, and then now you have extra taxes. So it's not like you get a W-2 and you don't have to think about anything. So you are really turning into a small business owner at that point in time. So it can seem very overwhelming.
Yeah, I can imagine. But freedom too, I feel like, as well. Like there's more freedom if you become like your own like person off to the side. Yeah.
Right. You are able to control your own schedule a bit more, you know, your schedule.
Prices too. Yeah.
You're doing your own pricing, you know, maybe a little bit more restrictive on the services, or you're like, you know, gearing towards one service more than another.
Okay.
Instead of kind of whoever the salon is, you know, a walk-in that's coming over to you. So, you know, I wanted to talk through kind of why it shouldn't be scary.
Let's do it.
Out on your own. So a lot of it, you know, once you go out on your own, it's about tracking everything.
Yeah.
And then also you do get a bit of a larger tax bill because when you're a W-2 employee, they're already taking out the Social Security and they're already taking out the Medicare. But when you kind of go out on your own, now you're responsible for making those payments yourself. They're not going to just be automatically taken out of your check as you're going through. So that's something to kind of keep in mind. And then also like income, because some people want to send you Zelle, some people want to send you Venmo. Like some people give you cash. So, you know, it's a little bit different than, you know, maybe a service-based business where you can just send an invoice through QuickBooks and it's all in one place and it's all these one things. Like, you know, like I said, like it could be Zelle, it could be Venmo, you could have like a Square processing unit. So you're taking payments from a bunch of different places. So I think one of the biggest things is just making sure that all of your income goes into one account.
That is fair.
That's also not your personal account.
Yes. We don't want commingling.
Yeah. We
We'll harp on the no commingling. Okay. Because even when you go out on your own, even if you're 1099, that is a business. Like you were separate. Okay. All right. Yeah.
And whether or not, you file information with the state, you can still go to your bank and ask them for a sole proprietorship bank account. So you don't have to go and get an LLC or a corporation or anything in order to set up a separate account where all of your income is going into. So that's one of the easiest ways is to just make sure that it's all going into one spot, because otherwise you're going to have stuff in all different places and it's going to be a little bit difficult. Also, if you receive Venmo, you want to make sure that you're depositing the full amount into the account. Because what you can do is somebody pays you through Venmo and then you keep it in your Venmo account, and then you have your assistant and you pay them from your Venmo balance. Well, now you have like income that you received, but it's not included on your tax return, but it will be on your 1099K, and everything gets muddled. So, I try to be very careful about spending from a Venmo balance because it can get really tricky kind of towards the end of the year. So if you are doing something like that, it's not terrible. You can still go into Venmo. You'd have to download the statements, and it's you can only go 90 days.
Yeah.
Which is annoying.
Only monthly too. They don't allow you to combine them into one thing to just get one big report. Yeah.
And if you want the longest, it's 90 days, but it's not 3 months. It's exactly 90 days.
Yeah.
So sometimes
ridiculous.
it ends.
Right. No, their whole reporting system is the most annoying thing to dig into.
Right.
Yeah.
So if you are spending from your Venmo balance, just the way that Venmo reports it for your accountant, you are going to pay extra for that. So it's a lot easier if when you get a payment from your into your Venmo, just transfer 100% into that income account. That way, yes, this is all of the cash, everything that I received. And we also do want to be careful that we are claiming everything.
Yeah.
It's, some people are like, well, if it's cash and I don't put it in my bank account or what have you. But I mean, the IRS can still figure it out, I mean, especially if you went from a W-2 employee over to, going out on your own. They know how much that you needed to earn in order to survive these last couple of years. So if that drastically drops because you're taking all these cash payments, then they're going to say, okay, well, what happened and how are they surviving? So especially if you make that a habit where your income just suddenly dips and then it's that level for a really, really long time, then they're going to say, well, how are you paying your rent? How are you, they know the cost of living in all of these different cities, and there's different calculations that they can use. So I always say, claim everything, number one, because there's always tax strategies that can be done to get rid of, to help with that tax liability. And even there's certain situations like the earned income credit. If you have no income, you can't get the credit. But if you are earning money and just below a certain threshold, then the IRS will give you this credit, and you'll get a bit of a refund to help you get through these next, phases and things. So that's why I say, the goal isn't necessarily to never pay any taxes. It's to let's get to the right amount and then also use these other strategies. So, things like once you're not a W-2 employee anymore, you're not eligible for the retirement plan.
Yeah.
So that you want to make sure you're still paying into a Roth IRA, especially in the beginning, or you can fund your SEP IRA. Also health insurance. So health insurance is a business deduction as long as your spouse isn't offered health insurance at their place of business. So you can still go to the healthcare marketplace or go to one of the health insurance companies directly. And then that would just be an additional business expense, as you're going through. So, maybe instead of getting a 40% commission, now you're getting 100%, but we still want to take into account, 30% of that is going to go towards your taxes, and then some will go towards these other things like creating the benefits for yourself, paying for the materials, things like that. So you can still, I would still live within that 40%, but now it's still even more than that because that 40% was subject to Social Security and Medicare and all of this other stuff. So really you were only getting maybe 30% of it. Yeah. So when you kind of go out on your own, if you have a full book of clients, most likely right off the bat, you're going to be earning more already. And I mean, it's always the issue that we see when it comes to, are you going to be W-2 versus 1099? And that's really when you're W-2, there's always going to be a ceiling.
Yeah.
So, when you're a 1099, and you're freelance, you really have a lot more choice in what you want. So because you can control your hours, you can control how much work you do, you can control your income a lot better. You know, it's not like, oh, am I, can I stay for overtime or things like that. If you want to earn more, there is a direct pathway where you can earn more versus in a W-2 situation. There's a lot of cases where you have to just do 100%, 150% of the work and hope that somebody recognizes you and hope that they are able to give you something, and normally it's going to be like a 3% increase that right now is less than what inflation is. So really, the longer you're in a W-2 position, you're actually moving backwards.
Gotcha. Okay.
Because if you're comparing year 1 and year 5, unless you had like a major promotion, if you stay at the same place, you're probably in year 5 going to be having like less value than what you did at year 1, versus you have a bit more control over that when you are your own business owner, so that you can make sure like, yes, I've been working hard. Now I have a lot more experience. I'm doing like much harder services and complicated. People are coming to me very specifically for these things because I have so much talent in it. And you're further along in year 5 than what you would be if you had just stayed as a W-2 employee at that point in time.
Okay.
So I think...
Oh, sorry. You go ahead.
Oh, I was just going to say, like that's one of the things that you have to ask yourself is, where do you want to be in 5 years?
Yeah. Yeah.
And if the question is, and sometimes, maybe you just want to still be in the same spot, that's totally fine. Yep. Yeah. It's okay to not want to add all these extra things. Yeah. But if you're saying, in 5 years, I want to be, at this position, then, the pathway may be to be your own business owner at that point in time.
And I think like making it not seem so scary can make it very helpful to like actually make that decision. If the thing holding you back is that you're just like, it just seems like it's a whole lot or whatever. And it's really like, if you break it down, it's not too bad. It's really about just like starting right with the right practices and doing your different things to like really help yourself. But yeah, I think it's easier to make a decision if you know what all the actual options are and like how difficult it may be.
Right. But, and that's where, especially if you're kind of unsure, having the separate bank accounts where you're saying, okay, all of my income goes into this one bank account. Then I have 30% goes into my tax savings. And then you have, the other 30% goes into an account where you use for all of your supplies. And then the 40% goes to you. And then that's like basically the same amount that you were getting before, but now you're already covering all of these things. And the only difference there is, it might still be the same 40%, but if there's an overage in your tax account, that money's right back into your pocket, and different things like that. And then you have the opportunity of like picking what retirement plans you would like, picking a better health plan for yourself, and then also picking different hours. And
you're not stuck on someone else's schedule and plans and things. So there is a lot more freedom to it if you decide to go that route.
Being able to choose your own niche and, really sticking to that. And
or even if you don't like all the clients and you want to just work with the people. I mean, like, you know what I mean? Like if there are certain clients that you're just like, oh, well, if I kept doing this, I'm just going to keep getting this, like this level of clientele or these types of clients and whatnot. Like not everybody meshes. So it'll be nice if you're just like, I am literally only going to work with people that I enjoy being with and like doing that. So there's more freedom with it. Yeah.
Because there are different like aesthetics and client bases for different salons and things like that. So,
so that's fair. I did have some questions. So like when it comes to the income, so when the income is coming in and it's coming from different areas, being a hairdresser usually means that you're dealing with tips and gratuity and whatnot. And then should they be treating that differently, or is it okay that it kind of just stays in that bucket as long as it goes into that separate business account? Okay, cool. Yeah. Because, sometimes it's separated out on these reports and things when you're getting paid and whatnot, or it's like, oh, I paid for service plus tip. And like, do they need to track that? Just the different kinds of questions.
I mean, just like when you're a W-2 employee, you need to claim your tips because those will be considered income.
So it's all good that they all go into the same bucket and whatnot. And then what do you, like in your experience and stuff, like what deductions maybe are being missed sometimes by the ones that go out on their own? So the ones that are their own business owners of.
Yeah. I mean, you have the regular materials, you have your equipment, if you're buying new scissors and things like that. But also the education pieces. So if you're going to different conferences or training sessions, you want to learn how to do extensions. Like all of that stuff can be considered a business expense now versus if you were a W-2 employee, that would just be something that you were doing kind of on your own, out of your own pocket. And it's not.
So continuing education for sure. Okay, cool.
Yeah. Then also, like if you have an Instagram page, sometimes there's subscriptions for that. So that it makes it easier for you to edit the posts or schedule them or what have you. Because, a lot of it too is like making sure that you have your portfolio ready, so
it's very important for hairdressers. So
having some sort of social media or a website or some way that people can see that, that's all considered a business expense as well.
So like software subscriptions and things to that. Okay, cool. And then we've kind of already talked a little bit about like the very clear like lifestyle changes that kind of go with it and whatnot. Do you think there's any like major myths or anything that's holding stylists back from going out on their own and renting a chair versus doing the W-2?
I think it's just like where it's a little bit scary, you have to jump off the cliff. Yeah.
Right. As a non-business owner, that sounds very scary. Even with knowing the things, it's still just like you really have to put yourself out there, and see if you'll sink or swim, kind of thing.
Yeah, you have to, you have to take that first step and jump off the cliff and just kind of go for it. So it's just making sure that you have all of this understanding in place and you have somebody that you can kind of turn to. So, don't go to one of those like box, tax preparation places or try to do it yourself online. It really saves you money paying someone else to be there for you, to help walk you through this process, whether that's like, you have less anxiety and you can sleep better at night and you're able to like make these better decisions on, so you're not constantly stressed about this business side of things, but also normally they're able to guide you in ways that they're saving you more than triple whatever their cost is. There's so many cases where people try to DIY it and they end up costing themselves a lot more money in the end. Like people are like, oh, I had my taxes done for free. And I'm like, great, because you lost $30,000 in tax savings. So it actually costs you $30,000 for somebody to not be paying attention to you, so it's just really having, some of that guidance and, making sure that not only are you educating yourself on like elevating your knowledge and your skills, but also making sure that you're taking the time to really understand this other side of things. And just knowing where you want to go with it. Because all of their responses are going to be different depending on where you want to go.
Yep.
And what your end goal is.
It's always that really hard question. What do you want? Yeah.
Yep.
Okay.
So making sure that you have that kind of clear in your mind and that you're communicating that to the mentors and support team around you, and just making sure you have a support team around you. You know, like, do you actually sell product? Then you have to collect sales tax, and what does that look like? And setting up your, payment processor to show the difference between what's a service and what was for a product, and all of those different things that they can kind of tell you, the pros and cons of making some of these decisions, and then you can go from there.
Yeah. I think that would take a lot of the scary out. So yeah. No, that's fair. Okay, cool.
Yep. So if you have any questions about kind of going out on your own and taking that leap, feel free to put a comment below or send us an email, and we are more than happy to talk through your particular situation.
Bye, guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.